Welcome to our International Financial Management course lecture. Today we will talk about clearing systems. Let's begin. In international financial management, clearing systems are crucial for processing payments, securities, and other financial transactions efficiently, securely, and accurately. These systems facilitate the transfer of funds and securities between institutions, reducing settlement risk and building trust in the global financial system. A clearing system is defined as a network or arrangement that manages the transfer of funds and securities from one financial institution to another. Its primary functions include matching trades, calculating net obligations, and ensuring the final settlement of payments and securities. In international finance, clearing systems facilitate cross-border transactions and ensure timely settlement in different currencies. They also reduce counterparty risk, which is the risk that one party fails to fulfill their obligation, and provide transparency and efficiency to global financial markets. There are different types of clearing systems, starting with payment clearing systems that handle interbank fund transfers. Examples include Fedwire in the US, CHAPS in the UK, and Target2 for the EU. Next are securities clearing systems, which handle the settlement of securities trades. Key examples include Euroclear, Clearstream, and DTCC. Finally, derivatives clearing systems manage futures, options, and swaps. Prominent examples are CME Clearing and ClearNet. Let's examine the basic clearing process. In a typical trade, a buyer places an order for securities and a seller offers them. The clearinghouse acts as an intermediary, receiving funds from the buyer and securities from the seller. It then ensures the correct transfer, sending securities to the buyer and funds to the seller, completing the transaction securely. Several key global institutions play a vital role in clearing. Euroclear, for instance, settles domestic and cross-border securities transactions across Europe. Clearstream offers clearing and settlement services specifically for bonds and equities. The Depository Trust and Clearing Corporation is a major U.S. post-trade financial services company. Continuous Linked Settlement specializes in clearing foreign exchange, or FX, transactions. Despite their benefits, clearing systems face various risks and challenges. Settlement risk occurs when one party defaults before a transaction is fully complete. Liquidity risk refers to insufficient funds to complete transactions. Operational risk includes system failures or cyber attacks that can disrupt operations. Finally, regulatory challenges arise from differing global regulations. In conclusion, clearing systems are the backbone of international financial operations, ensuring trust, efficiency, and stability in global markets. As financial markets become more interconnected, understanding clearing systems is critical for managing international financial operations effectively. Thank you for watching our lecture on international financial management focusing on clearing systems. See you at the next lecture.